Okay, folks, welcome back. This is the weekend edition for the ICT Mentorship, February 14th, 2021. This episode's lesson is going to be New York Session Insights in a Weekly Range. All right, so here we have the economic calendar for the week to come. On Monday, it's a bank holiday in the U.S. 7:30 p.m. Australian dollar medium impact monetary policy meeting minutes. Tuesday, 8 p.m. medium impact Australian dollar speaker. Wednesday, London Open, 2 a.m. medium impact GBP with CPI number. Wednesday, 8:30 a.m. New York Session Canadian impact is medium for CPI number for that currency. High impact for U.S. dollar core retail sales. And later in the day, 2 p.m., medium impact FOMC meeting minutes. And then 7:30 p.m., Australian dollar high impact employment change and unemployment rate. Thursday, New York Session, 8:30 a.m., medium impact for U.S. dollar, Philly Fed Manufacturing Index, unemployment claims. And 11 a.m., medium impact U.S. dollar crude oil inventories. Just for the folks that are new, again, every time we have a crude oil inventory number, that's always going to be impactful for Canadian dollar. So dollar CAD currencies, that's a study for you every single time we have a crude oil inventory data release. So note your charts around 11 o'clock in the morning on Thursday with dollar CAD, and you may be able to see things like fair value gaps, institutional order flow entry drills, and runs to liquidity. 2 a.m. on Friday, London Open, GBP, high impact retail sales. 3:15 a.m., high impact euro dollar, flash service PMI. 4:30 a.m., pound dollar, high impact flash service PMI. 8:30 a.m., Canadian dollar, core retail sales. And 9:45, dollar medium impact flash manufacturing PMI. All right, the dollar daily chart. All right, so we have the dollar daily chart, and we have this level here is the equivalent to 79% retracement level and 62% retracement level. And we have come off that optimal trade entry handsomely off of also the fair value gap here on the higher time frame chart. We have a sell side imbalance, buy side inefficiency. We traded up into basically consequent encroachment of that. I'd like to see it remain below that, and we'll see if it has any ability to get down and trade into its old January low. $60-minute dollar index. All right, here's that sell side imbalance, buy side inefficiency on the daily chart. And we had price consolidate going into Thursday's trading. We have a sell side liquidity pool resting below these relative equal lows. We traded up into the bearish order block, which is right here, and the sell side imbalance, buy side inefficiency, consequent encroachment, defined by the level here and here. So it went up about halfway, which is consequent encroachment, and nice reaction there. 15-minute time frame dollar index. Again, the sell side imbalance, buy side inefficiency is all here. Now, when you look at it like this on the lower time frames, it doesn't look like it would be a sell side imbalance, buy side inefficiency. It looks like it's rather inefficient, except for the little areas in here and here. Does not matter. You need to understand it from the daily time frame and then study. Once you go on the lower time frames, there's specific PD arrays that we'll focus on once we drop into lower time frames. But the context is working inside of that imbalance on the daily chart. So we had a buy side liquidity pool here. Again, as well here. Sell side liquidity pool, relative equal lows. So this is being viewed by retail traders as support. So the normal protocol is we're in a bearish market, dollar's likely to go lower. This is going to most likely be attacked. Okay. Doesn't mean I'm right, but just means that that's where I usually aim for. Price runs above short-term high in here and trades back down into a fair value gap. Consequent encroachment runs up, down closed candle inside of a breaker. The breaker is this last up closed candle because we have a low, the high, the lower low. So you find the highest up closed candle in there, extending out in time, cut through candles. We are not supply and demand. The breaker range is here, trades down into it here and into the order block. Rallies, clears buy side liquidity only right there. And what does it do? It runs above the short-term high into this last up closed candle, which is a bearish order block. But it's also the bearish order block on the 60-minute time frame and the sell side imbalance, buy side inefficiency, consequent encroachment of the daily chart, which is again in this area here we will be focusing on. Price runs up, hits it, immediate rejection. So we have a small little breaker in here that might need to be traded to before we run into this area here. So watch that on Sunday and or Monday's trading. Eurodollar daily chart. All right, keeping it real clean and focused. We have our bullish order block we are anticipating a reaction at. A handsome bounce has occurred. Buy side imbalance, sell side inefficiency with this one single candle defined by this high, this candle's low. We have the fair value gap. Trades down to just a little bit below consequent encroachment, but nonetheless it's nicely done. And then we had a real nice reaction off of that level. So do we have the continuation of the dollar going lower and euro going higher? If it does, we have a short-term little liquidity pool here that I'm not adding because I want to keep the chart clean, and I'm focusing here if we keep going higher. That's my anticipation. Until proven otherwise, that's what I'm looking for. What changes it? Well, if we trade down below on a closing basis, below the fair value gap low. Eurodollar hourly chart. All right, here's that daily buy side imbalance, sell side inefficiency in the form of a fair value gap. So it's this level here, which is the premium high. This level here, which is the discount low on the daily chart. All we're doing is transposing those levels that were marked up on the daily chart. When we drop down into the 60-minute chart, they will exist here and here. Now, in between this level and this level, we have another fair value gap right there. And that's what's being shown here with the blue lines. So we have a fair value gap on the daily, and within that, and at consequent encroachment, we have another fair value gap there. And look at the reaction there. So we do have a buy side liquidity pool resting just above here. That's probably going to be the draw near term, and I'll be looking for higher prices as a result. Euro dollar 15-minute time frame. Fair value gap in here. Nice little optimal trade entry, sells off. Rebounds, small little gap right in here. It comes back, fills that in handsomely. Drops precipitously, comes back up in, sells off into that lower level hourly chart fair value gap. Look at the bodies respecting the lower level discount low of the gap, and then runs up. We have a bullish breaker in here. Okay, so we have a low, a high, the lower low, last up close candle, extending out in time. So we're going to see if there's any follow through on the upside as a result of that, and then attack the buy side liquidity pool. If it needs to drop down, I'd like to see it not go below here. So we have a small little fair value gap in there. So if it drops down, that'll be enough. Preferably, I'd like to see it not do that. It's just what I'd rather see. All right, British pound daily chart. All right, so this thing keeps powering higher, punishing any short sellers. We have a small little buy side imbalance, sell side inefficiency in here, defined by this candle's high, this candle's low. We traded down into basically consequent encroachment, may have been just a little shy of it, but nonetheless, nicely delivered reaction there. We have a premium array in the form of a bearish order block at 139.18 and 4. That's what's indicated here. You can go out to your own time frame on the daily zoom out and you'll find that pretty easy. 1 hour chart on the British pound versus US dollar. Buy side liquidity pool resting above these relative equal highs. Trades down into a bullish order block and the old fair value gap here. Okay, extend that out in time, hits it, bang, rallies. So the larger imbalance here has the smaller old fair value gap and then the order block as well. So it trades down into these discount arrays and then you get the reaction. The question you get many times listening to me talk about fair value gaps, and when you see examples like this, it'll be, when do fair value gaps expire? Well, some of the rules are going to be applied to the ideas around the IPTA data ranges, and you learn that later in the mentorship, and I'll touch on those as well. So those individuals that know about the IPTA data ranges, they're not done. I haven't completed the teachings on those, so it's not just what you think you already know about it and it's it. We got to come back in and fill in a lot of gaps. British pound versus US dollar on 15-minute time frame. All right, so we have a buy side liquidity pool here that was reached into as well. The top of the old fair value gap, which is the premium high, that's what's being traded to here perfectly. And you get this reaction. Now remember I was talking about how the concepts I'm teaching you, contrast that with retail. Retail's support resistance idea, everybody's indoctrinated with that. I was the same way. But the books teach you to anticipate these types of reactions on supposed support and or resistance levels. The problem is it's so subjective. Which level do you draw a line on? So one of the things I've counseled you to do is in your charting, you want to keep a chart with your fair value gaps and keep extending them in the time. Now, obviously, you want to do this for each time frame, and that way you don't have, I think, 30 different fair value gaps, because then it'll start to lose its significance by studying it. So just keep a chart with 1 hour chart or 15-minute time frame, a daily chart, and keep extending them in the future. And don't worry about when they expire for right now. I want you to just study the influence they have way in the future. They'll come back to these levels and you'll get sensitivity. So you'll learn more things as we go through this year as it relates to fair value gaps and things of this nature. But for now, it's important for you to get a greater appreciation for them, because once they're traded to and filled in, we don't abandon them. We don't say, well, that's done, we're going to look to something else. That's the worst thing you can do, because the algorithm, since it remembers that level, it went back to it to reprice to it and allow efficient delivery of price in between its high and low. Once it trades there and completely fills it in and moves away, we don't look at that as a one and done. It's likely to be sensitive in the future and multiple times. There's no limit to how many times it can react. Don't think like an order block as well. An order block can be traded to multiple times. And that's the nature of having a reclaimed order block. And as long as the dealing range hasn't been violated above the bearish order block or below the bullish order block, the order block can be reclaimed indefinitely, as long as the dealing range is intact. So don't listen to these folks that say, once you hit the order block or you hit a breaker, it's no longer sensitive. They are talking from ignorance. Okay, and that's again, this is the reason why I get bent out of shape when I see other people attempting to teach from the stance of ignorance. They have no idea what they're talking about. And they're doing more harm, not only marring their own image that you're trying to build on my back, but they're harming the students that would be underneath them listening to that nonsense. And what's the common result of all that? Order blocks and things of this nature don't work because you're listening to someone that has no idea what they're talking about. But the reaction to order block, as I mentioned on the hourly chart, you can see that here. Trades back down into the last down closed candle here, which is the bullish order block, which is the fair value gap as well. Trades there, and then you get this nice pop. So you have the bullish order block, fair value gap, coupled with a fair value gap within a larger fair value gap. So what's occurring in this area here? Is that distribution? Yes, from those that were selling short. Smart money that's sold short here, they're distributing their short positions and accumulating new longs. So down here, this is accumulation of longs, and it's also distribution of shorts. So there's an overlapping, which is taking you back to the market efficiency paradigm. When we look at price, we're not looking at entry patterns, okay? We're not looking at trend lines and trends. We're looking at where's the liquidity and what's the narrative around that liquidity pool. This is accumulation of new longs, but it's also distribution of shorts. And then you have this pop up here. Let's go into a price action lesson. And this is one that I would have normally reserved it for like charter members, but I just feel generous, so it is what it is. The idea of the order block offering an intermediate term pop or bounce there. In other words, something tradable. And once it trades down there, the bodies of the candles are respecting that order block, which is absolutely phenomenal. When you start seeing these things, especially for someone that's been trading for a while and you've used things like, you know, harmonic or just retail support resistance ideas, when you see things like this, and I called your attention to it before it happened, and when it delivers, it's very, very exciting because you're learning about something that you were never aware of. It's been in your charts all this time. You can go back and look, like I showed on my YouTube channel the other day. I showed you a chart of cotton in that book that I originally started as a commodity trader. And the year that chart was produced and the data that was used to calculate it is 1983. That was before I was a trader. So I was trying to do the math on that, and I'm technically 11 years old in that year. So I wasn't even aware of trading. But that market produced the very pattern that I teach you here. Order block, fair value gap, and it runs with the optimal trade entry. Well, that same pattern is what's occurring right here. A low, it runs up, it drops back down, fair value gap, bullish order block. Now, here's the beautiful thing. I don't care, and neither should you, that this continues from where it's at right now. It doesn't need to. This run from here up into the order block here, that's a trade. Now, as a position trader, if you would have taken a long down here, you should be out with something. You should be taking something off here partially and allowing for the continuation on the upside, because nothing says that this is absolutely going to continue going higher. This could have been a long-term high. We don't know that. But from trading here up into here, you're working with a discount array over here, buying at a discount and selling at a premium. Why is this a premium? Why not up here? Well, that's the dealing range from there to here, but this dealing range is here to here. So you have a range that was excited and animated to the downside. So where did it start as a high? Right here. Just like this high here sets the stage for this decline down to here. Then we have this intermediate term bounce and then consolidation, and then the animation comes in right here. So your dealing range high is here to dealing range low here, which we anticipated a bounce at. So I want to talk a little bit about the weekly range, because that is a dealing range that is yet to be fulfilled. Okay, it's an unrealized dealing range. We work with this every single week. And the nature of what you're learning in this mentorship is finding opportunities in a weekly range expansion. We are not trying to forecast the closing price of the weekly range. But tonight, I'm going to teach you a little bit on how you can start to do that. Okay, it's not going to happen all the time, but this is one of the tools that I use to do it. I want you to take a look at the low here up to the high right there. Now I'm using the wicks and the tails. Why am I using the wicks and the tails right now and not the bodies? Because I'm using the entire range. I have to use the entire range because I'm going to show you the importance of having the 20 and 30 level. Now, in this mentorship, and I just don't recall exactly where it's at, but I'm going to teach you the TGIF trade, okay? And what that is the likelihood of a retracement and how far the retracement should go down, or if it's been going lower, how far it should retrace up. And the nature is you're trying to counter trend that. Now, before I get into this, please know that this is not something that you should be piling into if you're a new student. Like if you're a new student coming in month one, don't think that this is for you right now. It's not. I just want you to be, number one, fascinated with the level of precision that this is going to offer. And I'm also leaning on the things that I've already been talking about, that even the month one folks that have come in here, this has been in your videos. You probably didn't pay that much of attention to it because, again, you're listening for order blocks and things like that. This is one of those higher level teachings that once you see it, it's like, wow, there's absolutely an algorithm. There's something going on behind the scene that is not random. It's doing something that's highly specific, and there's rules to it. It's not just doing it indiscriminately. It's doing it based on a macro. A macro is a short list of instructions that is many times repeated. It's called upon. In programming, if you're a computer programmer, you kind of know what that is. But nonetheless, it's a recipe that keeps being used at specific times. And that's what I'm going to be focusing on in 2021. These are algorithmic theories. So you're going to see it. You're going to hear me call on things I've already talked about. And for some of you that are familiar with my TGIF trade, you'll see a lot of the logic that's being pulled from that as well. So what I'm doing is I'm calling your attention from this low to this high. And on my fib, I deleted or hid all of the like 62% retracement level, the 79% retracement level. All I did was untoggle the boxes. They're still in the overlay for the fib. It's just I'm not calling on them to be visible in my chart. But I am calling on 0.2 and 0.3. Okay? If you put those in your Fibonacci, and I've already showed you in videos earlier a couple weeks ago, even for the folks that came in, you have this information. Don't email me. Go back and look at a couple videos ago, and you'll see it's the last portion of one of the videos where I show, if I'm not mistaken, I think it's a daily log entry, where I'm actually showing you the last slide in the video. It'll give you the actual levels I have in my Fibonacci for TradingView. But these levels here, 0.2 and 0.3, are not in that. So I'm telling you, just add those into your Fibonacci and let that level, the 0 level, and the 1 level be the only levels that's visible. So in other words, toggle the little checkbox next to it. When you right click on the Fibonacci and click on properties or whatever, it'll take you to the visibility. And when you click on the little check next to each one of these levels, it'll appear. But if you untoggle the check, it won't appear on your indicator. Okay, so I feel dirty saying that word, indicator. But you know, it is an indicator, but we're using it for purposes that are not, I guess, orthodox. So we're going to take this level of 0.2 and 0.3 and extend that out. And what we're saying is, at this high from this low, because it's been all one-sided, how far can it drop? Now, forget for the moment right now why this is likely to drop, because I'm going to come back to this in a minute. It will not be just pure hindsight, because I warned you about it before it happened. I know you're going to go crazy when you go back and listen to the video, because it was there. You just didn't hear it. This high and its retracement down inside of the range low, here to here. Okay, so this is that reaction on the order block on the daily chart. We have all of this movement higher, and then we're anticipating price moving from this high down. But how far? How far can it trade down? Well, what I like to use is the 20 level and the 30 level of a particular range. And if you do TGIF, I think, search on the forum, you might get the the teachings. I have to double check on that. Don't quote me on that, but I think if you do that, you'll be able to find it in the videos. But it teaches TGIF, which is an intraday trade counter trend for the week, just for Fridays. But it's the same logic of using the 20 and 30% of the range. Now, what am I saying here? I'm saying that if I think it's bearish, or if you think it's bearish, you can study instances where it'll trade back down into as much as 30%. Okay, and I'll bring all this together in the teaching as we go along. But for now, just anticipate this much of a retracement. Now you can see it goes a little bit beyond that, and we're going to go into the science behind all that too. But for now, just know that if we're looking at weekly ranges, or in this case, this has been the only expansion so far on the upside for the month of February. So this is, in my opinion, a dynamic dealing range. So it's been a lot of energy behind it, and it gets to a specific day where it could create a high. And if it does, how far can it retrace? Now, we're not saying that this is the absolute high. It just means that if you want to be a counter trend trader, these are the tools that you can learn here under my tutelage. Stripping the Fibonacci off and keeping these levels only in focus, we're going to study all of this from this retracement here to here. If you recall, on the Wednesday video, I mentioned that Thursday can end up becoming the weekly high. Now, I didn't just say it this Wednesday. I've been calling that theory multiple times since the beginning of this year. So all of the new folks have heard this idea more than one time. I stated that Thursday tends to make the opposite end of the range. So if it's been bullish, as it's been here, it's been going up since Monday, and then we get to Thursday, and Thursday caps the weekly range on the upside, and then Friday we see it trade down. It comes off of the low on Friday, but it's still not going higher than Thursday's high, correct? Yeah. Now, some of you are thinking, wow, that's kind of neat. Like, that's something he did talk about, and it's right here in front of me. Well, we're going to go one step further, because for some of you hardline critics in here, I'm going to blow your socks off. If we zoom in, drop down into a 15-minute time frame, I also told you the time of the day on Thursday that the weekly high in bullish environments tends to form. That is New York Open. I know some of you probably don't remember it. I know, but I've also told you to download these videos. Now, I don't have a magic wand that can go into your hard drive or your flash drive where you're storing these videos and change them. Now, the fun part is, for some of you that don't remember me saying this, when you go back and listen to that video, you're going to be like, whoa, he really did say that. Yeah, I did. So the question is this: what do you do with that information? Well, there's several things you can do. Number one, if you are a short-term trader, you want to have the bulk of your trade off as you're going into Thursday New York Open. If you've been long or been scalping and you've been bullish all week, you really want to try to avoid taking any new long positions after Thursday New York Open. And the bulk of your positions should be squared and leaving only a small portion on in case Friday runs a little bit further in the upside. But you're going to find that about 70% of the time, why 70%? Go back through the data like I did for 40 years. That's what I did. And it comes to around a 70% likelihood that this is what happens. Now, for some of you that heard me say that, you're going to say, every single week, ICT says 70% of the time, Thursday makes the high of the week. That's not what I said. There's filters that were applied to that data crunching. When the market is bullish, Thursday, New York Open tends to create the high of the week 70% of the time. What happens when the market's consolidating majority of the week? Is it likely to create the high of the week on Thursday? No. That's not what I said. When you are one-sided and it's been delivering buy side predominantly, in other words, it's just been a bullish day, Monday, Tuesday, Wednesday, going into Thursday. Or if you looked at the weekly range from where it opened on Sunday to where it is trading on Thursday at New York Open, if it's been up in a bullish range, then it's probably creating the high of the day then, between 7 o'clock in the morning and 9 o'clock in the morning, New York local time. Now, think about that by itself. That right there spits in the face. That sounds offensive, but it's how I want to be about it. It spits in the face of these Goldman Sachs guys that are in this mentorship, by the way. Hello, Goldman Sachs. And you asked for this. That's the only reason why I'm saying it. They say that intraday traders or day traders are just basically working with noise, and no one can be consistent. No one can do these types of things. If you try to listen to these people like that, you're a fool. Run away from them because they're a con artist. Okay. Well, I must be a different kind of con artist, because the things I'm talking about in intraday trading seem to be working like science, like unbelievable science. And in fact, one of the Goldman Sachs alumni said, "You're not trying to do technical science." Well, around here, we're doing technical voodoo. We're doing things that defy all reasons that you would ever lean on in terms of retail logic, because what we're dealing with is something that is outside the scope of retail. So if we look at this high on Thursday at New York Open, what did I teach you about the wicks and the tails of candles? Okay, think about that for a moment. Pause your video before I say it. You didn't pause the video. The wicks and the tails are usually the variance by broker. You can't lean heavily on the wicks and the tails when you're looking for entries. Now, when you're measuring ranges, when you're trying to get the total range from low to high, you want to incorporate the tails and the wicks. But for entry purposes and targets for actual trades, I focus on the bodies. Okay. So with that logic in mind, looking at this area right in here, we had relative equal highs in here. So we had buy side liquidity here. The market runs up and takes that there. You see that? It runs above these highs right there. When did that move start? Did it start here? No. Did it start here? No. It started right there. Why here? Well, look at all the run up here. It dropped down. That's just a retracement taking stops. Runs again, comes back down, reaccumulates at the order block, and then pumps it through to get to buy side liquidity. So look at all this congestion in here. All that consolidation right there. Did this go below here? No. So we have a low, and then we have another low here. But it doesn't violate this dealing range low. So it's inside of that range. But it starts to run to here from that level. So that's why I'm telling you this is the dealing range low. So if you're looking at price, you're focusing primarily on these particular levels. The highest up close, the lowest down close. Now, in certain instances, you'll see that inside this area, it might be the lowest opening price. It's the lowest body, okay? So a body is defined by the open or the close. So we're looking at the lowest of either, the open or the close, and we're looking for the highest of either, the highest close or the highest opening price. So with that in mind, I'm going to add the Fibonacci on there. Now this time, I'm taking off that 0.2 and 0.3 level, and I'm only wanting to show the 0 level, the 1 level, and the -1 level. Now what that's showing here is a measurement from this candle's highest body to lowest candle body here. And it projects that range down 1 deviation. So the standard deviation of 1 of this range. So all we're doing is getting a measured move from this candle's close and this candle's close, and that same range projected from this candle's close down. That's what the math is doing with this indicator. All it's doing is allowing me to show, without having to draw it out, this is the level that's projected as a downside objective, which notice also is below. This is that 30 level, and this is that 20 level. In other words, this is 0.2 on that fib and 0.3 on that fib. When we drew it from the daily chart, and all those levels were removed, and only the 0.2 and 0.3 level was still in the fib. That's what these levels are here. When we drop down from this high at Thursday New York Open, we sell off and we go over the 0.3 level, or which would be 30% of the range that I measured from that daily order block up to this high. So did I pick out the high randomly? Is it hindsight? No. I told you Thursday New York Open tends to create 70% of the time the opposite end of the weekly range. Well, here's Thursday, here's New York Open, there's the high forming, and we're trading down here. What if you're not satisfied with just being able to call it down 30% of a retracement inside that range? What if you want to get really, really good at calling specific levels? Well, you have to incorporate the market structure here. Now, this is institutional market structure. Didn't you just mention this ICT in your YouTube video? Yes, I did. But I only teach it here. So when you're looking at market structure, you want to know how far a range can go. You have to have all the things I just gave you here, which were framed on institutional logic. Thursday New York Open tends to create the high of the week in bullish market environments. When does it not happen? When you have a real excited high impact news event on Friday. If there's a lack of any kind of news on Friday, generally that you're going to have that Thursday influence that you see here. Now, what I marked up over here was the institutional logic with this dealing range here. So I use this low that leads to this high here. So that is your dealing range that you work with for projecting downside standard deviations of 1. So this was one standard deviation going up to take the buy side liquidity out over here, but also forming the weekly high. Now we're going to take a huge quantum leap forward. If this is the high of the week and we take out this low, how far can we go down? Well, we can go down to 20% of the weekly range. We can go down to 30% of the weekly range, but in case we get a little animated, where's it going? One standard deviation here calls for 1.20817. Now, mind you, this is Forex.com's data feed. So your live account, the low here is going to be slightly different because, again, as I taught with the wicks and the tails and the candles, your broker is allowed to have a little bit of fluff in there, and sometimes they won't give you the low. Sometimes it'll go a little bit lower than what I'm showing you in TradingView. That's okay. If you use 30 as your ideal, but standard deviation is just below it by a little bit, stick to the 30, and that'll be enough, okay, plus spread. But what about this over here? If we extend that out in time from that level, boom. Now think, high of the week, intraday, retracement carried over into Friday. Where's it going to go to? Right here. Oh, this is too much, Michael. This is hindsight lipstick. This stuff isn't going to work like this. Right, that's what you're thinking right now. But there's a couple videos that you see me doing things like this in the charts, and it doesn't make any sense when you looked at your chart. When I was showing those examples, you were looking at your charts and thinking, how is he doing that? How is he finding turning points? And why is he buying there? Why is there a limit order sitting right there when his market trades down to that level? It hits the order, it fills it, and then runs away. How's that happening? How is he able to do that? What is ICT doing? Well, some of this. Some of this right here. Now, my question to you is where is this in retail? I don't know where it's at. And I have a $200,000 bounty out there now if someone can find what I'm teaching anywhere in print prior to 1996. It's not there. Nobody has this. Not Gann, not Steve Nielsen, not Larry Williams, nobody. When I looked at the charts back in the 90s, at one of the times where I had taken losses and I couldn't understand what was going on. I was sitting in my room, which I was renting and paying room and board at my aunt and uncle's house. And I literally, in tears, was weeping. And I just said, God, am I ever going to be able to do this? Like, I want to be able to see what I'm supposed to see here. I know there's something behind these. At the time, I was looking at open, high, low, and close bars, not candlesticks. But I was like, there has to be something hidden. There's always something hidden. And I just want to be able to see it. Can you show me? Well, these are some of those things that were starting to come off. Now, you hear about that still, quiet voice. And the first time I heard about that as a Christian, I was kind of thinking more of it than what I have had many instances of in my life. And grant me a little bit of liberty here, because I know some of you are atheists and some of you have belief in other religions. I'm not religious. I have a relationship with Christ, and I'm not here to try to preach to you. I'm not here to try to win you over. I'm not trying to make you believe in the Bible. I'm just sharing. The question I get is, how did I get this information? I'm telling you how this came. There's no books out there. There's no mentor out there. There's no people out there that sat down with me and said, Michael, this is what's going on. The same voice that I heard when I was 14 going on 15 years old, and my closest friend at the time, Randy Humphreys, which is now, he's passed away. He pulled out his father's gun, and it's the classic scenario where kids are playing with guns, they shouldn't do it, and he pointed the gun in my face and started following me around in the house. And I was like, put it down, man, it's going to go off. He goes, it's not loaded, don't worry. And I was like, what? And my back hit the wall, and I was by his front door, and it was open, and a little voice said, grab the door and pull it in front of you now. And I just did it. Now, I know some of you are flipping out thinking, did this guy just say he heard voices? No, I heard voice. One. And it doesn't sound like anybody's voice I could think of. Now, you know what your internal voice sounds like when you're talking to yourself. Like, don't speed right now. There's probably a cop on the other side of that hill that you can't see, but you just don't listen. And then when you get on that side, you get pulled over. You're like, man, I should have listened. That voice that you heard is your own voice. That's your conscience, basically. This was something different. It was somebody else that wasn't my internal conscious voice. It said, grab the door, pull it in front of you. I did. And no sooner did it hit my shoe, it bounced off the toe of my shoe, but not springing too far in front of me. But as soon as it hit my shoe and bounced away, paint chips hit me in the face, and a loud bang went off, and my ears were ringing. My legs turned to rubber. I was scared to death, and I thought I got shot in the face. And I would have been shot in the face, point blank range, with a shotgun. All the shot was on the side of the door I was on. Paint chips were the only thing that hit me in the face. Now, you're probably asking yourself, what has this got to do with this? Well, when I opened the door up and I saw my friend's eyes, wide as they could possibly be, white as a ghost, and I'm sure I probably looked the same, not one of that buckshot hit me. Not one. But later on, we both touched the door, and just touching the buckshot caused it to fall to the floor on the side of the door I was on. What if I didn't listen to that voice? I wouldn't have the children I have. I wouldn't have the life that I have. And you wouldn't be listening to me learning about trading. Later on in life, I started hearing this voice and didn't, again, think too much of it. I just thought it was just a coincidence type thing. But my son, who is also turning 16 on Sunday, on February 14th, Valentine's Day, which is my anniversary. I just got to 20 years this Sunday with my wife. Been with her longer than 20 years, by the way, but nonetheless. When he was coming out in delivery, my wife was being asked by the nurse, and we were in Franklin Square Hospital at the time. She was saying, "Are you ready to have this baby?" And she's like, "Yeah, I'm ready to have him. He's so big. I want to just get him out. Like, he's too much pressure. I'm just done." And she goes, "Well, how much do you think he weighs?" And she goes, "I don't really care how much he weighs. I just wanted to get it over with and get him out. I just can't wait for him to, be in my arms." And now at the time, we were not allowed to record pregnancies and deliveries and such, and because of the liability issues. If they drop the baby, we have a slam dunk lawsuit. They don't want that. So I had the camera buried underneath my coats and my wife's coats, and all the diaper bag stuff that we brought to the hospital when she was getting ready to have the baby. So I have the camera recording the whole time. And when the nurse asks her, "How much you think he weighs?" and my wife says, "I don't really care," the same voice that I heard when I was a teenager that said, "Pull the door in front of you," said, 6 pounds, 14 ounces. When he came out, I pretended in pantomime like I was turning the camera on, but it was on the whole time. And I walked over and they wiped him down and they laid him on the weighing table. And my camera was dialed right on in there because I wanted to see it come up. And it, no fluttering, not any movement. 6 pounds, 14 ounces. What do you do with that? What do you do with that? My youngest son, right before he was conceived, my wife and I had a miscarriage. I was in New York coming back from a trip, and she told me she had some stomach problems and a lot of pain. And I said, "Well, take it easy, and I'll be there in a few hours." Within the same hour, she texts. She says, "I need you to call me." So I called her, and she said, "I'm in a lot of pain, and I passed a clot." So I was like, "Okay, well, just lay there, and I'll be there soon. If you need your mom, call her." And I started praying to God, and I was like, don't let her have a miscarriage. But I had already kind of inside accepted it. I think that's what was happening, and it's what she did have. She had a miscarriage. And I basically was angry. I said, "I believe in you. I've trusted you, and why'd you let this happen?" And at the time, my wife wasn't really a believer. And I apologize if this offends any of you, because I'm not trying to make any of you feel like your religion or your lack of a religion is anything less significant in your own life. I'm answering something that I've always kept from all of you. But you want to know, so I'm telling you. I'm driving, I'm going down 95 South. I'm in New Jersey. I still got a ways to go. And I start talking to God. I'm like, how am I going to talk to my wife about you when she's mad at you already because you took her aunt from her? She passed away just a year or so before that with cancer, and she was mad at God. She goes, I'm mad at him. Why would he let this happen? If he was God, why would he let that happen? She was a good person. And I didn't have the answers for her back then. And I really didn't have an answer for this if she's having a miscarriage. Well, I get home, and it's what it is, and she's had a miscarriage. She had to go get a DNC and make sure everything was cleaned. We were trying to have a little girl. And without being too crude, we had already been intimate. A couple weeks later, without any more physical relationship, just awkwardness because of having the miscarriage and passing each other in the house without really saying too much of anything. And I'm trying to keep my distance because I want to talk to her about things, but she's not interested in talking. Well, at the time when I used to go to a church, I don't go to a church anymore. I pray every day, but I don't go to religious ceremonies and things of that nature. And I'm not trying to discourage any of you that do, because if you feel like you need to do that, then that's good, that you should do that. I don't feel that I need to do that. I have a very strong faith, as you're going to hear in this story and maybe one more. But I went to the church, and at the time, the pastor that was preaching up there, I'm sure he had some message that was really good, but I just couldn't hear him. I used to always sit at the farthest back pew. There was nobody behind me, nobody standing behind me. There was no chair or seat behind me. And the whole time I sat there and I was weeping, asking God, why did he do that to me? And how am I ever going to reach my wife? Whole time up there, that pastor's preaching his heart out, and I can't tell you one word he said. My attention was on this. I had a problem. I went there to worship, and I couldn't. I sat there and I complained and cried and asked, why are you doing this? Have I not believed in you? Have I not glorified you in the presence of people that don't even know who you are? Why are you doing this? That same voice I heard when I was a teenager, the same voice that told me my son's weight before he came out, over my right shoulder, I swear to God, I heard this. Judges 13:5, Michael. Judges 13:5. Now, at the time, I thought it was my imagination. And I knew if I would have grabbed that Bible and opened it up and it had nothing to do with anything I was thinking about, that would have been, I would have walked out of that church and I would have been done. For 2-3 minutes I wrestled. I said, I'm not going to open it up. I'm not looking at it. I grabbed it, thumbed through it. Judges 13, verse 5. Look it up. Behold, you shall conceive a son. The whole chapter's about a woman that can't have a baby. How did I pull that out of my imagination? I went home. I tried to talk to my wife about it. She said, I don't want to hear about it. I don't want to hear about it. I don't want to hear about God, and we're not having any more kids. I said, well, you got another thing coming. Because if he says it's coming, it's coming. That was on a Wednesday. That Sunday, I was watching TV. We were eating. And she went upstairs and she was doing some laundry. And she called for me. And I'm a little bit strange when it comes to eating. I don't like to have conversation when I'm eating, because the chances are I'm probably going to hear something that's going to upset me and turn me off. I won't be able to finish my meal. So she's calling for me, and I said, can you wait until I'm done? And that sounds a little rude, but it wasn't meant to be that way. And I guess she couldn't wait, obviously, and she came down, and she goes, here, and she's holding out something. Now, the ambient light from the television is all that was going on in the room, and a light from the dining room. And I thought she was handing me a toothbrush, like an electric toothbrush, but what it was a pregnancy test. And I grab it and look at it, and it says positive. And right away I'm thinking she found the pregnancy test that she used to find out that we were pregnant before she had the miscarriage. And she was crying. So I was like, I'm sorry that she got reminded of that, because we hadn't been talking about any of it. And she goes, no, I just took it. And I was like, what? She goes, I just took it. Well, that's my youngest son, Caden. And we went to her first prenatal visit, and the doctor was saying, you know, we need to come back here. We need to check some things. And we went through a couple different visitations throughout the early part of her pregnancy. And they said, okay, well, we have a problem. We got to give you a C-section. The placenta is covering the cervix, and he's not going to be able to come out that way. That same voice said, that woman's a liar, and you don't need to worry about any of that. It's going to be a natural birth. So I spoke out, and I said, you're a liar. And her eyes got really big. And I said, I don't know what you're talking about, because this baby's promised to me, and it's not going to come out through a C-section. God did not give me an issue like this for my wife to go through that. It's not happening. So I don't believe what you're saying. This baby's going to come out just fine. Well, he didn't come out by C-section. I could literally sit here and give you about 20 other instances like this. And it's not meant for you to believe in the Bible. It's not meant for you to believe that I'm a prophet. It's not meant for you to believe that I'm crazy. But imagine me going on Baby Pips and saying, here's how I learned all this stuff. You would have never listened to me. You would have laughed me off that forum, and it never, ever, ever would have been listened to beyond the first time I mentioned any of this. I don't care if you don't believe me. You can unsubscribe. You can stop. I don't care. I live this. And this same person talks to me. He encourages me. He corrects me when I'm wrong. When I used to look at these charts when I was younger, things would jump off like that. It would say, look at this. It wouldn't be a conversation. It would be, look at this. And I would study it, and it would be there. There is nobody sitting down with me when I was younger saying, this is what you do. You wouldn't believe me if I would have said this from the beginning. But where else can you find it? It's not anywhere else. I wanted to talk like this for so long. But this is my last one. And this is why I tell you, I get angry. And I'm offended when you all rip me off. Because you're stealing, not from me. You don't give him the opportunity to receive the glory. I don't want the glory. I don't want you to thank me. I don't want you to give me any praise. I'm not an FX god. I'm not a Forex trading god. I'm not nothing. I'm nothing but a human being that's been blessed with something I never deserved. I don't deserve any of this. If you knew me when I was younger, I was wicked. And I don't deserve any of this. But he keeps blessing me. And there's more than this. This is nothing. And I have to repent all the time because my flesh rises up when I see these fakes. These people out there, they talk smack, and they think this and they think that. I could get in there and win that Robins Cup in a week. In 1 week. It wasn't given to me for that. My flesh all the time wrestles. All the time with everybody else that tries to be like there's something they're not. And I know they're not. You know they're not. These are some of the things I was going to put in the books I was going to write, but I'm not writing them. They'll get tossed around, prostituted like everything else. I want you to hear it. I wanted you to hear it from me. And I don't care if you don't believe it. Because it's the truth. And there's no other explanation for it. If you look at the Monday's low, Monday creates the low of the week. Thursday's New York Open creates the high of the week. When I tell you I can call the low and the high of the week, a lot of it has to do with what I'm showing you here. Not everything, not every instance of it. There's other things I'm going to teach you as we go through this year that leads to these types of results. But if you had one-sidedness like this all week, from Monday up into Thursday, chances are, unless there's a Friday high impact, medium impact is not so much a factor, but usually a high impact news event. And it's not likely that Friday has these high impact red announcements on the calendar. But if there's an absence of that high impact on Friday, you have the likelihood of Thursday creating the high of the week. Now, you don't always get an instance where it trades down this far. Sometimes it'll go just to 20% of the weekly range. If that's enough for you to find a trade in as a counter trend trade, that's something you can obviously explore and see if that fits inside of a model that you would feel comfortable trading with. It's very fascinating if you ever decide to trade it, that's one thing. But if you don't want to trade it, the study of it and how often it forms is really interesting. And this is what I meant many times so far in the new group, if you are listening to me, the idea of whether or not you listen to everything I say in the videos. I leave details in there that I'm going to be able to call on. And then when you get deeper into the mentorship, you'll see these older videos that are not old in the sense that they're stale or no longer important. They're relevant forever. They're rules because these things repeat. If you consider what I've shown you here, with this chart here, if we were looking at it from the scope of a weekly range, and we were looking at an open, high, low, close bar of the weekly range, it would look like this: the high and the low of the week, and where it opened for the week and where it closed. Again, we're not trying to forecast the closing price. But if you look at that weekly range, what I'm trying to impress upon you is, as a short-term trader, my focus is, if I'm bullish, I'm going to look at that opening price on Sunday. That's here. If I'm bullish, I'm going to be working most of my attention in the area right down in here, because that's usually going to be the first thought process is Monday low of the week. If nothing really lines up with technicals for me to suggest that Monday's creating the low of the week, then I'll look for Tuesday, because Tuesday generally is 70% of the time the low of the week. That's usually in London Open. Not all the time, but 70% of the time, when it's going to be a bullish week, that's usually what takes place. If it starts and creates a low on Monday and rallies up, and the London Open on Tuesday doesn't trade lower than Monday's low, then you have to obviously consider the fact that the low of the week was Monday, and therefore anything past London Open on Tuesday, just focus on being a buyer and don't anticipate Monday's low being taken out. There are some things you'll learn to anticipate Monday's low being taken out, but predominantly what I just said is true. Thursday is the high of the week when you're bullish, as I indicated in this here. But what changes that or negates that likely unfolding is, again, the economic calendar on Friday with a high impact news event. If it doesn't have one, chances are 70% likelihood Thursday is going to be the high of the week